So here are some of the examples that goes into land account. Okay, keep in mind, again, all of these will not be depreciated later. But the reason why we're mentioning these here is if a problem tells you the company is purchasing a piece of land, this is the purchase price, this is the brokerage fee, survey fee, property taxes, transfer cost, you need to add them all together in that journal entry. Okay, so this is an example of the possible categories that you may see in a problem. Purchase price is easy to understand. Brokerage fee, if you hire an agent to help you locate this asset, of course you may need to pay a certain fee to that agent. Survey legal fees usually is related to understanding the boundary of the land and any prior history related to that piece of land. Okay, so some of the transactions may tell you this. Expense also incurred. Property taxes definitely comes with purchasing land. Any transfer costs, costs of clearing, removing previously unwanted building there, may also be a necessary cost. So when you look at these categories, basically, if you can't differentiate land and land improvement, basically the question is, without paying these, is the company able to use that piece of land? If the answer to this question is no, then those are the things that goes under a land account. Okay, later I will talk about land improvement. Those are fencing, paving, lights, and signs are minor costs compared to these. These related to, oftentimes these has to also submit documents to government agencies. So these are necessary costs to use the land. They're not depreciated later on. But they have to be added together when you journalize the land transaction. Show you an example here. All the categories of bullet points also is listed here exactly. So here's a case that the purchase price of that piece of land, assuming it's $50,000, and there's necessary related costs. The problem tells you that for property taxes, you need to spend an additional $4,000. Transfer taxes, $2,000. Removing the building will cost you additional $5,000. Understanding the property, the boundary, costs you $1,000. This transaction, if it asks you to journalize this purchase piece of land entry, then you will not only be journalizing that $50,000, but you have to add in all of the necessary taxes, removal building fees, basically all the fees that the problem tells you, lists there. Okay, it may not be 5 categories, it could be just 6 of them or 7 of them. Okay, but the key point here is that you have to know under cost principle, we will add together whatever incurred on this day when we purchase this piece of land. Okay, so it will be a total of 50, 4,000, 2,000, 5,000, 1,000, altogether $62,000. Okay, now this example here, how is the company paying the money?
It's paying part of it on borrowed money and the other on a little bit of cash.
Part of it by borrow money, right? Payable. And we haven't talked about payable for a while. Notes payable, we'll touch on this in more details in chapter 10 and 11. Basically, this is borrowing money, and usually, again, you sign on a promissory note. So basically, it's the opposite concept of notes receivable. Notes receivable is the company borrowing money to others. Notes payable, your company is borrowing money from others. Okay, so to account for the $62,000, company is paying, usually for real estate or for more expensive assets, you'll be paying a down payment first, and then the remaining parts you'll be paying it off later on little by little. Okay, either in a mortgage form or notes payable form, you'll be paying it all together with interest later on to the party that you borrow money from. Okay, so this is just an example that could happen. You may be paying $50,000 by notes payable, meaning a payment later plus interest, and immediately $12,000 by cash. Okay, now in the chapter you'll see also capitalization of certain asset. This term here simply means purchasing plan asset. So we either say purchasing plan asset land or capitalization of land, $62,000. So that just means acquisition of plan asset. That's what capitalization means. So it tells you this entry capitalized land at $62,000, meaning an asset account was debited. We purchased an asset. so these are the categories under land account. And then as I mentioned, these are the necessary costs before the land can actually be used by the company.